Ira Epstein of Linn Associates with your financial market wrap-up for Wednesday, June 5th, 2019, and we're approaching 5:30 p.m. Central Daylight Time, which means the boards behind me are already showing you Thursday trades. So the evening sessions have already opened. They open at 5 p.m. Central Daylight Time. The break in the stock market, I think, is an anticipation of announcements coming out on Mexico-U.S. discussions today. And the way the market's acting, it's not very pretty. It also sounds to me as though Fiat and Renault have called off their potential merger. Gold is up a bit concerned on the action. And I'm looking at the energy market, and if you're getting another layer of tariff wars, that's weighing on the energies as well. So these are the things, I don't know what the Mexican embassy announcement's going to be or what the U.S. is going to say shortly. I will discuss it in detail in my morning subscriber video, but it's important to pay attention to what's happening right now. I'm still in the office because I want to write about it for my evening commentary. When you look at the weekly area chart of closes, we had a big break, a small rally so far off that break, and you can see where it's at. Has the market done any damage to the downtrend that it had? Well, it did. The market stepped out of it just actually yesterday when the market took out that high. It followed through today, and now the question is, what happens tonight off the announcements that we're going to get? I don't know. Where did the market stop on the rally? Right at the 18-day average of closes. And you so often hear me talk about the fact that that 18-day average, I call the line in the sand. I just believe a lot of traders look at that. Do some use a 20-day or a 21? Of course. I don't own the 18-day average. I just like it better for a lot of reasons that I've learned over the years. And I'm talking decades. I'm not talking 10 years either. I'm talking many decades. And I'm comfortable with it. Now, on the way down, if the market breaks hard, potentially the 100-day average and the 200-day average combination come into play, and will they offer support if the market breaks hard? I don't know. I can tell you you're at the first resistance point and not trending. You've got a lower low, a higher high. You went back to a neutral spot in the market, and the market's waiting on a key piece of news. In terms of momentum, the market is no longer in oversold territory. That's important because this could give bears, if they wanted to jump on the market, a reason to not worry about one of the momentum indicators not being oversold. We're going to find out what that means. When you come to the NASDAQ, the rally actually stopped shy of the last rally high, I believe. This was the high, 72.71 and a quarter. The rally now got to 72.45. 25, 72.14 is where you're at. So you still have the pattern of lower highs, lower lows. This market is still very much from the swing line in a bear pattern. The negative is a technician is you are oversold in this market. Bias down, trend down, but oversold. By the way, notice that the market's playing at this 200-day average. Should that give ground again, the next support's closer to that lower Bollinger Band. In the Dow, tell me where you rallied. This is where you looked at when you were coming down to the Bollinger Bands. Start up, I am certain I would have said layers of resistance, 200-day average, 18, and the 100. Those three numbers right through there. Today the market rallies, gets out of an oversold territory, and tonight the market's stalling as we're talking, down 116 points as I'm on with you. In the Russell, all the market did is make a run attempt at the 18. It got pretty close to it. The market here, if you look at how it's working, is still in oversold territory. The pattern is still one of lower highs, lower lows, bias down. These are all different levels of resistance on the way up in this market. If this market comes down, I don't have any key moving averages, so the lower Bollinger Band might be the next support. In the VIX, you stepped out of a trend. The market coming into the day had this higher lows, higher highs. Hasn't been able to get up to the upper Bollinger Band. It stopped at the 18-day average, and it's still playing there, so to speak. If the market breaks from here, the 100-day average, but with the stock market down tonight the way it is, if that follows through in the morning, I would expect this market rallies back through that 18-day average. In bonds, I've left the June, and I'm now tracking the Septembers. What I'm looking at right here is the market flirting with losing an embedded reading. The importance of that is if it loses it, often it leads to price in the 18-day average making a run at each other. This market's had a heck of a run to the upside. You've got to ask yourself tonight, what does a tariff war with Mexico mean? And does that bullish or bearish in the bond market? In the 10-year note, it's the same. You're down to like 2.1% in the 10-year. You're still embedded here. So that is a stronger market than the bonds are. When I take a look at TLT, this market lost its embedded reading. This is a sign that this leg, if it follows through it all in the morning when the market opens, if it doesn't jump higher, it's a sign you probably ran out of this momentum leg and the market's ready to stall a little bit. In terms of the dollar index, you got down yesterday, made a challenge of the lower Bollinger Band. The pattern is lower highs, lower lows in an oversold condition. First support, Bollinger Band. Second, the 100-day average. You went down, spun back up. I don't know tonight if the market's going to buy dollars or not, depending on what the tariff situation is with Mexico. First resistance point, though, is 97.58 if it rallies. In the euro, the market is now open and it's pretty much unchanged. You had a big failure against where I would have expected the first resistance, the first challenge of the upper Bollinger Band, and the market's failing there. Now, if it continues to fail, we have to look at the 18-day average. Remember also, we have the European Central Bank announcement coming up shortly. So trading these markets, you've got a whole slew of things to look at. In the British pound, you still have the pattern of lower highs, but you've had a corrective move take place. You lost the embedded reading, and the market made its run against the 18-day average. It's sort of in neutral territory right here, trying to figure out its next move. Japanese yen had what's called a key reversal down. What is a key reversal? It's the highest high that you make on a leg of a move. Then you take from that high, you take out the previous day's high, previous day's low, you close lower, and ideally under the day's open. All three elements were met here. Now the question is, does this market get a bid off of anything that the U.S., China, U.S. and Mexico are doing or not? Said that wrong. Momentum-wise, both numbers over 80 today, both over 80 yesterday, not yet for an embedded reading. So I think smart money was taking some money off the table, but I don't know how smart they'll be depending on what we hear tonight about the tariff war. Bitcoin's been in a corrective mode. I don't know if you'll get to that lower Bollinger Band, but it certainly is a target. The market, when it lost the embedded reading, stepped out of this uptrend mode that it had, and it went back to the 18-day average, and it's sort of playing in that zone right now. In the crude oil, this is the August Brent versus the August WTI, and as you can see, I put on the 18-day moving average of closes. The bias favors the Brent at this point. The market is still doing that as I see it. As you can see here, big numbers to the downside. Look at the size of this break. The U.S. is just storing oil, be it distillates, be it gasoline, be it crude, big amounts. I mean, the API number yesterday to me was a blowout number, putting in 12 million barrels. The EIA today was 15 million barrels. That's huge. So the question is, what next? You have the embedded reading. You get down to a number, you know that in the Brent, OPEC controls with Russia an awful lot of this production. We'll see if the market's going to see production come off the market. In the U.S., little different story. It's our WTI boys at work, and look at how this market has come apart. Selling down here, I'm not saying you're not in a bear trend, you are. But where do you put a stop on something like this? You have the embedded reading, and until it's lost, my work says you're staying down and that there's willing sellers on the rally. The same thing is true of the gasoline. The embedded reading rules the day. And all that I see is a market that had gotten very extended, a number of key days under the Bollinger Band, and it's trying to move to the right-hand side of it. That's it. And I'm also bothered that this 18-day average looks like it wants to go through that 100. That would be another very bearish signal on the market. It's called a bearish crossover. When we come to nat gas, until you get warm weather, this market's in trouble. And you can see how the market is just falling apart. You need to have a reason for consumption of the nat gas. It's going to be air conditioning. It's June 5th. It's been unusually cool, but as much as it's cool, we could end up with a very hot summer and you don't know where you're going. This market, until it gets that cool weather, staying in its bear trend. Excuse me. I talk about this and a lot more in the morning. You know, you get up, the first thing most of us do if you're traders, you're checking what happened internationally, what's the market doing. I get up about 5 in the morning, read, watch, learn, and then by 6:15 in the morning, I start recording charts for my subscribers. They look just the way you saw there. The idea is you're having your cup of coffee or whatever, and when the tape comes out, it's generally my video. I call it tape. It's the video. I try to get it out to you before 7 a.m. Let's assume you've got trade ideas and you're trying and looking at these different markets. What do you think? Well, I make it easy because the tape or the video, even though it's about 15 minutes long, you take your cursor and you can drag it on the bottom. It'll say that you're in the stock indices, you're in the metal section, you're in the energy section. Each one of these will light up as you go there. But another way you can do it is on the side. You're going to see each of these sections listed. Just click it. It'll take you right there on the video so you can get to where you want. I'm able in these morning videos to do something that I can't do in other videos. I'm able to tell you buy here, sell there, do this. And the reason is you need a user ID and a password to see the video. When I'm here doing these videos for you right now, as much as I can talk general markets, I do. I'll talk to you what I think the trend is the market overbought, oversold? But you're not going to hear me say, you should buy here, you should sell there. Not going to do that. Where I do that is in this video that looks just like this. And the reason is the dark colors jump off your computer screens in a different way. I'm not in it. I'm talking with my headset. I'm recording it. Like I said, typically at 6:15 in the morning, throwing out all this, telling you what the active traders are. But I've already seen what Asia's done. I've seen what Europe's done. Now I'm bringing it together for you in the morning, and I'm assuming you've got your own trade ideas, and the idea here is to work with you on them. How do you take it from there? Well, it's really simple. I do charge for this. 26.5 cents a day. If that's not worth it to you, don't get it. It's that simple. But for the first 30 days, $7.95. After that, if you like what you've seen, and there's no contract with you, $15 every 30 days, or you can buy a year up front for $156. You can go to our website. There's a lot of information on this at www.iraepstein.com. It's all explained under education or research. It'll say Ira's Morning Subscriber video. Read about it. You can sign up for it right there as well. I'm Ira Epstein. You have a good day. I'm going to my office now to see what's going on between the U.S. and Mexico. Have a good day.